Welcome to the May 13th, 2019 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group, and your financial weatherman right here on YouTube. Join us each week for a fast-paced tour of the global financial markets with insights that you just can't get anywhere else. This is the 10-day trading range on the Dow. The end of the week, even a little bit lower, all but confirming U.S. equity markets are likely range-bound in a range that was established about 18 months ago. The decline of about 1,000 Dow points during the week corresponded to the trade negotiation headlines with China and potential new tariffs. Each time that we've seen it, a headline like that, we've seen a triple-digit decline in the Dow. But confirming that range-bound status with the Dow hitting a ceiling near 27,000 and a low last year in the mini panic of 22,000, this week reaffirms that sideways market. It's important, especially in light of earnings. Let's see what earnings have done for this quarter. S&P 500 largest publicly traded companies in the U.S. Sales growth pretty healthy, near 5%. Earnings growth about 2%. That's a little bit of slowing growth, which is one of the headlines. This weekend, we're going to cover more details about the current market and strategy. Let's take a look at the energy market and their earnings. This is actually energy infrastructure. The three biggest pipeline companies in the United States in the S&P 500. Notice the earnings growth. The growth that we see here, well, it's about 15 to 26% for Williams, ONEOK, and Kinder Morgan. But that's double-digit growth in earnings. Let's check another section of the energy infrastructure. The pipeline system, we're seeing earnings growth from the pipelines and energy infrastructure. This index is primarily energy infrastructure, 18% earnings growth. That corresponds to the pipes being full, liquid natural gas exportation, and this weekend we'll get more granular about our strategy for capturing dividends and gain potential, not without risk, but certainly being backed up by strong earnings growth. Let's have a little fun with IPOs. The Beyond Meat was an IPO this year, initial public offering for shares, in a meat substitute company. It must be really tasty stuff because they were going to price the deal at 20. They said no, 25. Then it was opened at 72, not 25, and it went all the way to $80 right here that we see. And that company lost $18 million in the year prior. Lyft and Uber did their part this week to collapse the earnings. Lyft actually lost nearly $1 billion last year. Uber managed to more than double that in their losses, but both companies coming public at huge valuations. The Uber story this week underscored by a strike. The drivers did their part by going on strike Wednesday, and Lyft shares actually fell about $4 or $5, nearly 10% in a single day, down to trading down as low as 55. The IPO for Lyft, about $72. That does not have a good track record, especially for money-losing companies. My compliance officer, Izzy Sanchez, says IP no. And these are good examples. All right, real estate. We're going to do an extended section on the real estate revolution that's underway in the United States. And big players have emerged with big research budgets to capture the data and the transactions. What's the outcome for the residential real estate market? Don't miss NetWorthRadio.com. We go on an extended insight into the real estate industry and the likely grand finale of this housing cycle, what it looks like, facilitated by liquidity and valuations. Redfin is a big player. You can see since they came public, not much activity there. They're still trying to figure out how to make money. Zillow, arguably the big data collector in the industry, they spent $600 million last year on research, according to a report that we have. But their dominance hasn't really resulted in a good performance, at least from the middle of 2018 through now. Again, seeking to actually show they can grow fast enough. But the dominance of transactions, where even players are emerging that will buy the new house you want and your old house and send you packing in days, those transactions are going to have a profound effect on the real estate market going forward. Don't miss us at NetWorthRadio.com. I'm Spencer McGowan, your financial weatherman. Thank you for joining us today. Be sure to subscribe for special reports in fast-breaking markets. My firm, McGowan Group Asset Management, sponsors NetWorthRadio.com and, of course, our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations in bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.